Hi, Norman Hallett here with your next 4-minute drill for traders. We're rounding third and heading for home with our discussion on preserving capital, which I've dubbed as the trader's best friend. Now, in this segment, I'd like to hit on a few bullet points for you. First, if there were a holy grail in trading, it would have to be adequately capitalized. You need to have enough money to trade and take small risks. By having the funding to consistently take small percentage risks compared to the size of your account, you'll survive any series of losses long enough to prosper. Now, I know many successful traders who wiped out small accounts early in their careers, and it was only until they became adequately capitalized and took reasonable risks that they survived, then prospered as long-term traders. Next, never add to or average down a losing position. If you're wrong, admit it and get out of the trade. I'm speaking to traders here, not investors. As an investor, there are some strategies that involve averaging down that sometimes takes years to mature to profit. But for us traders, averaging down is a bad idea. Take your loss, move on. Next up, always have an actual stop in the market. Mental stops don't work. Why? Because of your own power of justification. When you have a mental stop in, your mind almost immediately, almost automatically starts to justify why it would be okay to give the trade a little more time when your mental stop is being approached. Don't outsmart yourself. Put an actual stop in. It's much harder to make a physical move to lift the stop if you start justifying, which will result in you keeping your stop in, which is what you want. So put your stops in and follow your trading plan. Now, another point to preserve your capital, and it's a simple one. Know your market. Now, I trade primarily futures contracts, and I can tell you from personal experience that you need to know when government reports come out, crop reports, first notice days, everything about the market and the contract. And I'll go a step further and say I've learned to be aware of strong seasonal patterns to help me determine which direction to trade. Boy, I can't tell you how helpful knowing your seasonals are. For stock traders, you need to be aware of dividend payout dates, major stock reports in the sector that your stock is in, and of course, earnings report of the stock you're trading and the major stocks in your sector whose movement can affect your stock. There's nothing worse than taking a surprise big loss because you didn't take the time to know your market and you forgot to check if there were any reports coming out that day. You feel like an idiot, and you probably have a good case to prove it because it's something you could have prevented that was in your control. So please know your market. And my last point for today, be willing to stop trading and reevaluate the markets and your methodology when you encounter a string of losses. The number for me is 6 or 7 in a row, or 8 out of 10 trades. Many times your review will result in no change and you'll continue to trade with the same parameters, but you've given yourself a mental break and you'll be ready to go again with a refreshed positive attitude. Okay, that's it for this edition of 4-Minute Drill for Traders. Now, next week, we'll be wrapping up our focus on capital preservation, so please don't miss next week's drill. And until then, stay disciplined.